Good morning, traders. This is a live trade recap. I took 2 trades this morning right at the market open. I have everything on video. We're going to go over it right now. As always, I like to start by showing you my screener. So I use this mid-cap screener. Make sure that you always click these 3 dots, click on modify, and then you can see that my filters are applied. Then I organize the list by volume, and then I'm only interested in the stocks on the first page, so kind of the top volume stocks. They must be trading with 500,000 shares or more right at 9 o'clock or right at 9:30, right at the market open. That's a lot to ask for. There's only 1, 2, maybe 3 stocks that pop up that have that volume right at the open. So it's pretty easy to filter through the stocks. And then I'm just looking at the green ones, the ones that are going up in price. And then I check them on the daily chart. So let's take a look at the video. So EDU is the first one that met that screener criteria, but here's the daily chart and it's trading below the 200 MA. So that means it's in a downtrend overall, a long-term downtrend. So it immediately gets removed from my list. And then I keep screening for stocks. And then the next one was US Steel, which is ticker symbol S. You could see that one was trading. Here's the 200 MA. This is the daily chart. It's trading above the 200 MA, so it's in a long-term uptrend. And I could look for trade opportunities. Now here it is on the 5-minute chart, and I'm just looking for previous highs. I want to see it trading above the pre-market, aftermarket, and previous day high, and it is doing that. So now I just wait for a pullback to take an entry. Okay, so here's the pullback. It pulls all the way back down almost to point A of the ABCD pattern. As long as it doesn't break the price where the point A is, then I can still look for an entry. So 23.29 is the bottom of the ABCD pattern. As long as it stays above that, I can take an entry, and it does. So let's fast forward a little bit. You can see it got very close to it, but it never broke below it. That's the cutoff for me. If it breaks below that level, then I cannot take a trade unless it makes a new high. So it must regain all of that price that it lost and then make a new high to show that it's really strong. So here we are hovering over this candle. The next candle is the one that I get in on. So the high of this candle is 23.42. So I'm looking for 23.43 to get in. So here it comes. Let's take a look at this bubble. 23.41, 42, 43, and there you see I trigger my hotkeys immediately. I get 1 cent slippage, which is not bad. You could see how the price kind of continued higher once it hit that 23.43 because other people were looking for that same entry, which is fine. I mean, that's, you want to be trading with others. That way you're all going to benefit from the price moving in the same direction. So now I'm using my 2R calculator, which you could download from the Facebook trading group by the same name, and that gives me my profit target. So the name of the Facebook trading group is Trading Armor. So the profit target is 23.74. My stop loss 23.29. You know, so the target is 2 times the risk. That way, if I lose one trade, or sorry, if I lose 2 trades, it could be canceled out by 1 trade. So that's the idea behind that all or nothing 2R trading. You're always going for 2 times your risk. So now there is one more stock that pops up on the screener. That's Macy's, ticker symbol M. I pulled it up. You know, one of the things I'm trying to do now is kind of focus on one stock. So I was kind of, you know, looking to just stay with this stock and forget about any others. But I still pull them up on the screener. And then when you see something like this, such a strong, clean pattern, you know, you can't, and this, I don't think this would really qualify as a FOMO thing. I'm allowed to take up to 3 trades per day. So if I'm in a trade like this that looks like it might not work out, and I see something like this, then I think it is in my best interest to look for a pullback, an entry, and take a trade on that as well. So that's what I did here on Macy's. The only unfortunate thing with this trade was that it didn't give much of a pullback, but it's not for me to decide whether it's enough of a pullback or not. My criteria for a pullback is at least 1 red candle, and then I can get in for a new high. Or actually, I could get in after a green candle if the green candle kind of gaps down and closes lower than the previous one. So that's my 2 criteria for a pullback. Obviously, all of these green candles made new highs, so there was no entry you could take on those. But here's a red candle, so that signifies a pullback. So the earliest I could get in is 8:15 on that 18:15 on that candle. I don't think it happens. I think it prints one more. Yeah. So now we have a green candle with a lower high than this previous candle. The high is 18.13, so I'm looking for 18.14 or higher to get in. So watch this price bubble, 18.12, 18.13. It's going to come in just a second here. There it is, 18.14. You can see that I triggered my hotkeys immediately. I got filled in at 18.15, again, because other people are looking at that same entry. So, you know, you're getting in line with other people basically when all of you put orders in at the same time. So 1 cent slippage again on an $18 stock is absolutely nothing. So 18, this is a small risk anyway, a low risk, and a so it's easier for the target to get hit is what I'm getting at. And you can see in my 2R calculator, 18.15, there's the entry, the stop 18.08, my profit target is 18.29. The risk is only 0.39%. That's not a risk based on my account size or anything. That's just based on the amount that the price has moved. So, or I guess from the risk. So 0.39% is the difference between the 18.15 and 18.08. So that's how I get my risk. So my reward is twice that. So let's round that up to 0.4. So it's a 0.8% return on investment. This first trade would be like a 1.3% return on investment. So that's how that number works. So these were both low risk trades, but again, you know, I'm really just looking for the probability of the trade working out, not so much the risk. If I can guarantee that the trades will work out above my break-even win rate, then I don't really care about the risk, because over time the money will add up. So I don't need to be taking high-risk trades. If I can guarantee a higher probability of the trades working out, then in time I'll be making money. So that's what happens, and let's see how these trades work out. Again, I don't judge the trades once I'm in them. Yes, I felt like this thing was overextended, but it met my criteria to take an entry. It gave me a pullback, and I'm supposed to enter on the first pullback, and that's what I did. And I don't need to worry about now, okay, we're getting another pullback. Am I going to get stopped out? I don't think about any of that stuff. Once I have this profit target and stop loss out, I just let the trade play out. It's always best to just stick to your plan, even if you do get stopped out. And there you go. I get hit. My 2R target gets hit. I get filled exactly where I want to on Macy's. And then the U.S. steel trade is also working out. It's 1 cent away from my target, and boom, there it goes. I get hit. So no need to move those down. Both of these stocks did move quite a bit higher, and I'm not really worried about that right now. I just want to get my 2R profit target and run. But in the future, once I prove that this strategy is profitable, I can start tracking and will start tracking, okay, what if I would have held till 3R? I'm still going to just take the profit at 2R because that's what's proven to work, but I'll start tracking for a profit target of 3R. And of course, by that time, I'll be doing full position size trades, since I'll have 100 trades proving this strategy profitable. So those are the trades. We'll take a look at the spreadsheet real quick. You could see them on the spreadsheet. So there's X, that's the U.S. steel trade. And then there's Macy's, M, right there. So it was 100% win rate today, and because obviously both trades worked out. And the money obviously is not the issue here. We're not trying to make money off of this. We're trying to collect data and test to see if we can get above a break-even win rate, which is 33%. And you can see the average of all of my days of trading is 61.31%, which is nice and high. But the more important number here is the win rate of the actual trades. I've had 15 winners, 33 losers, and out of 33 trades, 15 winners out of 33 trades. So the win percentage is 45-45, but that includes some error trades. I mark those out on the chart with these red boxes or blue box. So the red boxes are error trades, and the blue boxes are trades that I will no longer take because I've changed my plan since I've traded them. So removing those trades, which is this number here, win rate without error, is kind of a way to show you what this plan will do in the future based on the changes that I make as I learn the shortcomings of the plan. So that's what that number is, and then that's the average of those two trades, of those two numbers. And this is the win rate after if all of the trades, but if I've only taken 3 trades, because you could see in the beginning there I was taking up to 6 trades at one time. So right now I've decided that I'm only going to take 3 trades no matter what, and you can see how positively that affects the win rate of this trading system. So everything looks good because the break even is 33%. So we just need to get this thing out to 100 trades to give it a better test, because there's something called the law of large numbers. And if you're not familiar with what that is, you should check out the law of large numbers, like on the Wikipedia page, or watch someone do 100 coin flips, and you'll get the idea for how the law of large numbers affects statistical outcomes. So that's it. As always, make sure that you go into every single trade with a plan. Stick to your plan no matter what. Honor your profit target, take your stop losses, and in the long run, you should be green. Take care.